Happy Tuesday there, Maverick traders. This is Rob Reinhold. It is the market roundup for August 12th. Let's get into it. In this session, we're going to be going through the news of the day. We had a big CPI report. We had all-time highs. And I've got some trades for you, 2 bulls and 1 sideways.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
All right, let's start off with the news here today because we got some big news this morning. The CPI report that everyone was looking forward to, it came out as expected. The core number was plus 0.3 as expected. The headline number plus 0.2 as expected. The one little bit of surprise they got was that the year over year was lower. It was supposed to be 2.8%. It came in at 2.7%, and that made the market happy. Basically, what this market is saying is we are definitely getting a September rate cut, and I 100% agree. 100% agree that the Fed is going to cut rates in September. Now, the bond yields didn't move much because that's already been priced in, but the stock market really liked it. The S&P and NASDAQ closed at all-time highs. The Russell's not there yet, but you can see that today, 1% on Dow and S&P, Q's up 1.4. Look at that Russell, 3% on that Russell. It is definitely playing catch up here. Oil down, gold down a little bit. And we take a look at the market internals, and this was just a strong day. 78% of stocks going up. We now have 70% of stocks above their 50-day moving average. That isn't ultra bullish. That's moderately bullish, but not ultra bullish as far as 50-day moving average goes. We take a look at the charts here. Look, we had this big pullback, and then there's been nothing but buying. It's just been nothing but buying. Now, look, there's been decent pullbacks in there. We've got 3 out of 7 red candles, but everything's being bought up. And if you take a look at today's intraday chart, this is today's intraday chart, 5-minute. You've seen this before. Now, remember, when institutions buy shares, they buy millions of shares, and they don't just hit the buy button. They buy them 10,000 shares at a time. So what they do is they sit out on the bid, meaning that I will buy 10,000 shares below the market price. So anytime there's a pullback, those orders get filled. But they need millions of shares, so they're constantly refreshing their bids. So you can see whenever there's any sort of little pullback, it is so small. And then when there's a run, there's no sellers out there to counter it. And then all of a sudden, you've got people on the bid. This is telling you that the institutional buyers were still buying at the end of the day. Again, they don't make one trade and go away. They are constantly accumulating shares. And if we take a look at the RSP, this is the equally weighted S&P 500. I pointed out over the weekend that we did not have a very good bounce back in the RSP, where we had a huge bounce back in the S&P. And I talked about how the 11 stocks in the S&P are worth 40% of the index. Today was different. We actually had a bigger return in the RSP than we did the S&P. This is a good sign. This is a good sign when the market isn't super narrow. A broad rally tells you that there is a lot of participation coming into this market. Looking at the heat map, you can see there's some red sprinkled around there, but not much. Everything's just super, super bullish on this day. We were at a +2, and now at all-time highs, we got to go to a +3. That 20-day moving average has steepened back. Everything looks bullish here. Here we are. We're in the middle part of August. Summer trading is here. There's not a lot of activity. There's not a lot of sellers. The economy's doing okay. Money's pouring into the market. This is one of those seasonal periods where the markets tend to just keep floating higher. And I think we're probably going to see that for the next at least week or two. I'm a little bit worried about September, but we can talk about that later. But right now, everything's bullish. So how do you play this? I said this a couple of weeks ago. I said this is the time when the bull markets where all the stupid stuff runs. And I had to clarify what I meant by stupid stuff. What I meant is highly speculative companies that don't really have any fundamentals behind them, but could make it big. Like people start betting on the next Googles, and they're willing to buy them up to astronomical levels because all the Googles, Metas, Microsofts, they've already gone up so much. They're looking for that next one. This here is D-Wave Computing, QBTS, and I cut off this chart because I wanted to see more of this high base, but this stock rallied from $7 all the way up to $19. So you see, we now have 3 months of a base. That's a good consolidation from a stock that basically went up 200%. I don't know if it's going to break out at this point, but I do know we've really held this 50-day moving average here right at 17. That's been a rock wall there that has bounced off of. It's tried several times to break it. We finally got a decent candle off the bottom today, closing at the high. Yeah, there's going to be some resistance up at 20, but these are the markets where these kind of stocks can go higher. I think this thing could go to 23, 24, 25, somewhere in there. I'm not going to play it that aggressively. I could just play like the 18-20 bull call spread and probably get about 1.5 to 1 risk reward ratio. Maybe go a little higher to 21. If you want, this is one of those that really could take off here after this 3 months of consolidation. Another one here, SoFi. Same story. Big run up, got a little tired, had to consolidate for a while, even had a gap up on earnings, great earnings, and it came back down. It just hadn't rested enough. And you can see this candle today tells you that even at the end of the day, they are ready to buy. It has cleared out of this base. Next stop, 27, 28. I'm not going to play it that aggressively. Probably a 23, 25 vertical spread. On the sideways trade, CVS here. We've got some resistance up at 70, some support down at 60. It's just a really nice window. And it's right there, smack dab in the middle, 65. Moving averages are flattened out. I think a 60, 65, 70 butterfly makes a whole lot of sense. Either about a week or two out, I think, for the time frame. Not going into September. Not going to go that far out. Looking to keep this a little bit short term. So what's likely for tomorrow? Pretty much more of the same. I know people who are bearish here or can't buy into this bull market are saying, this is crazy. It can't go anymore. Well, guess what? It is crazy. You are right on the first part. It is crazy. These are astronomical levels. And I'm not talking about just how far the markets have gone. I'm talking about valuations. I was talking with a trader and they were telling me how the valuations today are even higher than they were in the dot-com bubble. And I said, look, there's no debate this is a bubble. That's not in debate. You are correct that it is a bubble. But that doesn't mean it's done. It doesn't mean it's done. And it doesn't mean it's going to pop anytime soon. We don't know when it's going to pop. So get on the right side of the market, put your bias aside, and plug your nose and buy. That's where we are in this market. I am a little concerned about September, so I'm looking to actually pare back here over the next week or two to where I'm a little bit defensive, and if I miss a run, I'm totally fine. We've had a great run through the summer. But I think for the next week or two, I think it's smooth sailing, likely to see all-time highs most days. I don't think we'll get many 1% days. I think they're going to be like plus 0.3% days, but still higher. We do have the PPI tomorrow, but even if that one comes out bad, no one cares. If it comes out for good, then all of a sudden people are going to say, see, let's go ahead and buy more. I just see this market moving higher. Earnings tomorrow, Cisco. That's about it until we get to NVIDIA's earnings. Take care. Goodbye, everyone.